Good morning, guys. Welcome to this Friday, January 23rd. Thank God it's Friday. We need it. We had a short week, Martin Luther King Day on Monday. It's a short week. Friday came quickly. And it this whole week has been very interesting market action. It started off the week really feeling like the whole thing was coming apart, and then everything just went away when deals were made. So, and right now we have the second day here. Yesterday was the first day back up again, holding the line. Today is going to be the second day, and if we can hold it going into the weekend, I think we are maybe in a good shape here. Earnings season is still I think the main factor right now we're dealing with. But we were down here at this lower distribution here for a bit, and we could have certainly tipped past that volume edge and been finding ourselves in a trajectory to the downside. But so far, it's been avoided, and I think the guys are playing their cards pretty well because they create a little bit of havoc, get what they want, and then everything comes down. The market is still acting like a baby, reacting to everything a little bit disproportionate, and you can take advantage of that to a certain extent, you know. Now the starting off today, we are pretty much range bound. As you can see, the overnight hasn't done much. It's kind of flopping around. Gold is still to the upside. They are 49.65. They're hitting 5,000 soon. So something is up with gold, and they're rallying like crazy. Silver is up to $100. Remember, I was looking at silver not too long ago. It's like at 15.20. It's like 5 times the value on silver. Now, if you ever holding silver, you've been holding silver for 10 years and seeing it do nothing, and then suddenly you have this pop. It will be satisfying, but that's one of those assets which, if you own it when it happens, you're smiling, but sitting on it and waiting for it, that would be very, very tough. Um, Looking at the news, though, PMI composite at 9:45, consumer sentiment and leading indicators at 10. So that's what we have. 9:45 and 10, we have news this morning. Nothing at 8:30. So I would just start off range bound. I would look to buy weakness, sell strength, and see if we can assume they're going to trade in this range. So if they start trending down towards this area, the 68, 80 to 90s, I would look to buy weakness all the way down there and look to sell strength all the way up here to the 7,000, 7,015s. In the bigger picture, initially, I would probably look for a level outside the obvious. So on the short side, to get started there, I would look for short setups against the 69.45s, the 55s, the 60s, 70s, up to the 70s, and then the 80s here. So above the 70s here, I would start leaning in on the long side, and maybe wait for the 80s to be taken out as well, 80 and 90s here. But I think above that 69.70, I think we may have a directional move going. So I would probably stay on the long side if it starts trading above it. Just be mindful. I mean, when you get up to these levels, taking it one level outside the obvious, that could be the 70s, could also be the 80, 85s up here, running it up, testing that mode from a prior distribution. And that could be the area which actually fails when they get there. So, but I would stay on the long side on above 70s until I see them starting to choke, start to churn. They start stalling. And you've seen that they run it up here. You have a car that run into the level. They'll go bounce off it a few times. They start churning back and forth. A couple of times you should be able to get on a long trade. If it doesn't start developing to the upside, that's when you start thinking maybe a short trade is in order instead. Rotation back down. So that's the way I would look at that. On the way down, pretty much same story. Looking to buy against the 69.35s, 25s, down to the 10s here for rotations up. Below 6,900, that would be the level outside the obvious. Below the 6,900, I would be more inclined to look to the short side. They retrace it back down here. Could be buying opportunities all the way down here as well. And the same story there. If they are down there flirting with the lows and it's time to push it lower, I would stay on the short side below the 6,900s and see how far they can take it. If they start stalling, at one of these support areas or in between. I mean, you never know when to find a new support area, but if that starts happening, same story there. You run into a low bounce, you drift down, try to retest, it goes back and forth, churning, and then that's in. It could be short. If it's short, it's not so much that they're running out of gas at that point. But if you see them start building value at the level, then you know they kind of run out of gas, and the chances are they're going to reverse it. If on a low, you're going to see rotation back up. At the high, you're going to see a rotation back down again. So we're starting off pretty much range bound, watching that 6,900 on the downside, the 6,970 on the upside. And when it starts trading outside of that range, we may have a move either to the downside or the upside developing. Now, so 6,970 and 6,900, that takes us right there. So it's pretty close in this range. And remember, I said I'm looking to buy all the way down here to the 6860s, but once it starts trading below this area, the 6,900s, we may be running. It's hard to say how far they're going to run it down to the lower end of the range. Just be looking for those buying opportunities with a lot more caution. Same story on the way up, about 6,970. It starts trading up in this upper range. I would be a lot more selective in terms of getting my shorts on or rotations back down again. But still looking for it until you see really them taking out that 7,015 to 20 or taking out the lows here at the 6820. Below those two, then we have then we know that we have a move out of the middle going. And we may have some bigger concern ahead of us. But so far the earnings has been pretty good. So I mean the bank earnings were great. So I mean there's going to be reporting earnings here for the next 2-3 weeks. So as we start seeing some of these tech earnings, probably next week and the week after, then we'll get a bit better feel for how that AI trade is going to drive the market. All right, so initially looking to buy against the 35s, 25s, 15s down to the 10s. Looking to sell strength against the 45s, 55s, 60s, 70s, and maybe up to the 80s, but above 70s, I'm going to start look towards the long side. So that's how we get started. On the NASDAQ, my capital flow down here, also holding in the range. Same analysis on the NASDAQ, but the level's going to be here at the looking to buy against the 580s, the 540s, 470s, down to the 420s for rotations up. Looking for short setups against the 650s, 690s, 740s, and maybe up to the 830s. But I would probably look to the long side if the 740s comes out. That's been a pretty solid stop right there at the 740s. So I would be a little bit more aggressive on the long side if 740 comes out. But on the way down, if you get early weakness, I would give it a little bit of room. 470s is when I start thinking about the short side. 430s, I'm definitely start thinking about I'll be on the short side at that point. So a little bit more room on the downside when it comes to the Nasdaq. So, but pretty much the same analysis. Looking to sell strength all the way up here to the 26,000s almost, and looking to buy weakness all the way down here to this level, the 240, 200 to 240s. And if they start trading below that, the 200 to 240 area of support on the on Nasdaq, then I would be. I think we have something much bigger happening. And the same story there to start blowing up the highs here. We may have another attempt to move out of the middle building. But right now, and as we are getting earnings, as long as you don't have any earnings report really derailing stuff or anything else blowing up in the world, then chances are we're going to see more of a range-bound market here. So initially looking to sell strength for 640s. 690s up to the 740s for rotations down. Looking to buy against the 590s, 580 to 90s, 530s, 480s for rotations back up. Last one would be against that 430s. So 480 and 430, that's the areas on the downside you need to pay attention to. So that's how we get started now. There's one geopolitical thing I think may happen. I mean, you may see some military action against the Iranians, and that could potentially cause a short-term reaction in the market, right? If that happens. So, because that just again, it rattles that powder keg. I don't think that would be anything which is going to be long lasting. We know what happened last time, and then they were in much better shape. And right now, they're not in great shape at all. They have all this internal unrest. But I'm thinking that would be something I would keep on my radar. If that happens over a weekend or something, that following week, you may want to consider the short side at that point. But anyway, so overall, earnings report I think is the biggest thing right now going on. And then, of course, geopolitical, that would be the only thing that kind of occurred to me the other day that, yeah, that's probably going to happen. Something's going to happen there. And then finally, bond market heading up. So the trade I took yesterday, talked about that one. That was a run here. I was shorter than the sevens at 7 or 8, whichever it was. And it didn't back off. It just sat there. So like a few minutes after we wrapped up the wrap up, like 10 minutes later, I just scratched the trade. But got out, and that was it. And so you can see the overnight has been taking this higher. So they're drifting back up in this upper range again. The bond market is not bad. It's kind of had this little rotation down for a bit. Now they're back up in this upper range. And you can see the obvious 115 is where value is happening. High volume area above it at 16.26 to 117. You have a high volume area at the 14s and one here at this 115. So they're going back and forth between those two. Right now, they're smack in the middle. Yeah, it's doing range bound trading on the bonds. Looking to sell strength against the 24s up to the 116. Looking to buy weakness 115.16, 15.10, 15.06s. I think below 15.06s, I'm taking off that long bias, but looks like they're trying to head up towards that 116 attractor. This one right there, this area right there is 160. It's more like 117. They're right in that low volume area right now, so that could technically stall the market. Low volume areas do, but it has been trading back and forth so much, so it's getting to be tough. So I didn't have anything in between here, so as you see, they stalled right up here against the halfway through a range, right here at the 15.21s. But I don't really have anything here, which gives me an idea that something may be going on there. So I'm looking at this area right here, the high of that distribution, the low of this prior overnight. It's a pretty good TPO range right there. So I'm going to be waiting for the 24s and see if that kind of comes together. But bond market has been it is a super slow market until it starts moving. So you kind of have to trade that with a lot of patience. But it's worthwhile. I mean, it's and usually you know when you're wrong pretty freaking quick. So, and that sucks. So you get in, you can sit in a trade for a good like 2 hours, where nothing even happens. And other times you get in and you literally like 5 seconds later they take you out like, oh great. So that's the bond market for you. But you had to just look for those setups when the edges kind of define themselves. Just try to take the trade and see how it develops. Anyway, back to the ES and NASDAQ, and we'll see how this shakes out for today. So remember, 9:45 and 10 we have news. Otherwise, it's Friday. You guys trade with a bit of caution, and I will see you guys back at 11:30. All right, guys, later.